All the unicorn founders I know, they are the more relaxed, chilled, and happiest person I know. And it was before being billionaires.
Yeah, and specifically, I think it's about IT guys. They're just coding, just trying to be in the room. And like Steve Blank usually says, just go out of the building and talk to the client.
So you can, if you work at Facebook right now, you get $500,000 per year as a salary and you enjoy life. And at 5 p.m. you close the phone and you go home.
Nice office.
Right? Nice office, yeah, that's great. Why you want to be an entrepreneur? Because entrepreneur is the challenge. I want to conquer the world. I want to do something. And when you go to investor, the main mistake I see is people go there with crazy evaluation, especially in emerging markets, and they ask a lot of money that they don't need. If you look at from Nike to Tesla to SpaceX to whatever, they spend probably 6 to 7 years being on verge of failure, but then you push hard enough and you always make it.
Hello guys, it's another podcast on MOST Startup Media. My name is Alim. I'm the managing partner of MOST Holding and the CEO of MOST Ventures. Again, there is one more podcast on our channel where we invite great entrepreneurs, investors, and just great people with a huge experience specifically in doing their own business. And I hope that all of our podcasts give you a lot of insights that you can use in your businesses and companies and startups. So today we have a great guest from originally Italy, Francesco Cracolici, the seed investor, the angel, the managing partner and growth officer at CrossFund, and also the CEO at Nomadic Minds. And also you work with the EBRD Star Venture program that we launched, and we're going to talk a little bit later about that. So welcome to Kazakhstan, and welcome to our channel.
Thank you. Super happy to be here. Super excited. I've seen the companies here and it looks great. I'm sure Kazakhstan will be a next big ecosystem in like 3 to 5 years.
Okay, good statement.
Yeah.
We're going to come back to this. Yeah, it's one of my actual things that I would love to talk to you about, the ecosystem. So just to give it a plan, I would love to, for our listeners, I think we, by knowing the experience that Francesco has, we are going to talk about fundraising, specifically one of the important subjects for the startups. I know that Francesco also is an entrepreneur, serial entrepreneur, and also the investor, the angel investor. So we're going to talk about this, your experience, and specifically, we have our own club. So I will be also personally interested to hear your story about that. And about the Star Venture program that we actually launched today. But since the podcast will be published a little bit later, but I hope it will be before deadline that Star Venture program has. Okay, so Francesco, my first question is actually simple. What sparked your interest to the region, and why you decided to visit Kazakhstan?
So there's a big change coming right now in the whole planet. Capital is going slowly away from the big region and start looking outside. And whomever has a great mind and a great project and the willing to work 5 to 10 years on a project have the opportunity to create a massive startups, doesn't matter where they are. Before, you either need to be in Silicon Valley, you need to be in London, you have to be in Tel Aviv, Shenzhen, and you could. Right now, everywhere on the planet, you can build a great company and change the world. And that's a fact. Now it means that there are plenty of places on the planet with great talent, great minds, great skills. They are completely untapped right now. Mm-hmm. So there are places, again, plenty of future millionaires, billionaires that we don't know yet. Where are the places where you will see the most of those millionaires and billionaires in 5-10 years? There will be the places where the people have connection with the major ecosystem, where the people have access to resources, access to talent, and when the people are eager to do whatever it takes to make it. And if you look at these characteristics, you can clearly see that Kazakhstan is among the top of the list in 3 to 5 to 7 years to become a place on the map on the global startup ecosystem.
Yeah, I even heard, I totally agree, and it's good that you started from this point. I heard a statement, if you don't look at these emerging markets, what I call emerging markets, it can be a missed opportunity.
Yeah.
Yeah, and yeah, totally right, even for Kazakhstan. Yeah, good. But let's come back to this for sure, and good introduction. But I think our listeners would love to, and me also, to hear your story. Maybe we can start from your background. I know that you already created several companies, you made an exit, and yeah, what was it?
Yeah, so I did a bunch of companies. Not all of them were successful. We're not gonna talk about this, the failure, okay. But we definitely.
But let's talk. I mean, no, people like fuck ups, you know.
Yeah. So the whole point is, I did a bunch of fuck ups, and probably gonna do much more in the future, hopefully.
Okay.
But then, long story short, I created a company. It was a traditional, let's say, marketing agency focused first on Italian market, and then we expand, and then finally we reached a certain level that we could sell it, and we sold it. And my lesson learned, and so there's no point to go much into details because it's not that interesting. What is interesting, and I'm gonna tell you right now, there is one lesson I learned that changed my whole perspective about how I see startups, and I can clearly see that there's two lessons actually, that everyone on the planet that has been successful have these clear two things written here in mind. Mm-hmm. So the first thing is about sales. When we had the company, we had a churn rate. So churn rate is how many clients try you and then decide to drop you off, or about 80%. Like the average churn rate should be 3%, 2%. Mm-hmm. I got 80. So 80% of people I work with, they didn't like me. No, they didn't like Francesco. I mean, I'm very agreeable, but they didn't like the product. So I learned, there's two lessons I learned that change the way I look at startups. And I can tell you that so as you know right now, across fund we have 1,000 angel plus successful people. I work personally with plenty of millionaires and billionaires in Silicon Valley. And I can tell you that each one of them knows these two things very well. And that's why they're successful. The first thing is about sales. So back in my company, we had 80% churn rate. It means that 100 clients, 80 will try the product and say buy and then regret about it. The average churn rate should be between 2 and 5%. I got 80. So you might think, Francesco, that's a very shitty company. But the reality is that we were selling like crazy. We were selling to anyone and everyone. And we were convincing people to buy. And we receive acquisition offers and stuff. Mm-hmm. So what I learned is your product is the least important thing. What's very important is selling. And if you want to sell, you need to have a good product, mm-hmm. right? But when you have very good at selling and you can sell whatever, you can package your product in the way people like it, then you have enough information and enough money to fix the product. So sales is massively important. It's mm-hmm. the only thing, the product is just a weapon to sell more. I can name you thousands of startups with great products and zero sales, and then they fail. And I can name you thousands of startups with very bad product, but great sales team that made them. Mm-hmm. There's a company in London I knew, is now worth 150 million plus. They were selling a cybersecurity solution. The solution didn't exist. Mm. But the good thing about cybersecurity is that, if I selling you anti-dinosaurs solution, I sell to you and like, look, there's no dinosaurs, it's working. So that's what they were doing. Zero product, just sales. And now they're obviously I won't name them, but they're $150 million company right now because it's all about sales.
It was like fake it before you make it?
Yeah, it's fake it and fake it and fake it and then eventually make it. That's what they did.
Okay.
But that's the whole point. So sales is the king and always will be the king, and you always will be judged on sales. Love sales, success, zero sales, no success. Now, how you make sales is your job. But the goal is making sales, always. Second thing that I look at, I've seen tons of entrepreneurs working 24/7, doing everything. Be always stressed, always low energy because they're always worried about stuff. All the unicorn founders I know, they are the more relaxed, chilled, and happiest person I know. And it was before being billionaires. Just being in the right mental state, when you know everything, even if it's true, you know everything is going to be alright at a certain point. And you're relaxed, and whatever's going to happen, you're just going to have fun. That's the way to go. And so I ask a bunch of investors, they invest in billion-dollar companies in emerging markets. What do they have in common? If we dig down, they always tell me the same thing. They don't want to work. They're very good in hiring people and let them do the work. So there is this company called WePat. It's the biggest Eastern Europe success story. It's an $8 billion company. When they ask the investors, what is the main characteristic of the CEO? He's lazy. He just like hire people, let them do the work, but he doesn't do anything. Just think.
Okay.
And then what people don't get it. So focus on sales, be lazy, and have fun. That's what I see being the main driver of success. And but what people do is focus on the product, worry a lot, and work all day, all night. So that's it.
Okay, but good, interesting insight in specifically the last thing that you said. But so, do you agree with such a statement connected to what you just said? Like, here's a startup, early stage, starting the business. 50% of the focus should go into the product development, and 50% to the sales, or it should be different, or like you said, fake it before you make it.
No, the whole point is here. If we wanna, so develop a product is costly, time consuming, and to be honest, it's a big pain in the ass. The problem is that right now you probably don't have any information on what people want. So what you need to have first is understand what people want, what kind of words you have to say to people to convince them to buy your products. When I mean word, I don't need any special formula. I need what feature do you need to have that make people buy your product. I have this great friend of mine that is actually my main mentor. He's called Zach Quadius. He's probably one of the most successful investors in Silicon Valley. He invests in 3 companies, got 3 unicorns. And he's always saying the same sentence. When you talk to a client at 10 p.m. at night, you call him, he's putting his children to bed. And you call him and say, hey, that's what I'm doing. And he stops and say, that's interesting. I'm busy now, but let's talk tomorrow. That's where you have found product market fit. And that's where you know that your product is good. So what's your job at the beginning is try to identify what can you tell to this person to make them say, yes, let's talk tomorrow. If you identify these, then sales is easy and then you develop your product.
Can you outsource this?
What?
Outsource?
Outsource.
Okay, I'm the founder, but I'm not so good in selling.
Yeah.
But can I outsource and find another guy who's going to call and make this?
No, again, it's not about the call. It's not about saying any secret words. It's not about hypnotizing them. It's about telling, to like a bank, like a banker and say, hey, I can have a product that can fix all your privacy problem. And it's like, okay, let's talk. It's not about what you say. It's not about how you say. It's about what product are you offering. So can you outsource sales? In theory, you can. In practice, the reality sales is understanding what people need is the 99% of the job, so you shouldn't. One of the people at Star Venture that was mentored by this guy called Gambiani. Gambiani created 2 unicorns. 2. One is called Udemy. And we asked him, what is the main thing we need to do to make this company successful? And we were talking about a company with 2 million in revenue. They received 4 million in funding. No, so not a guy that just started, a guy that is already, it's actually a girl from Jordan, that's already going good. We asked him what this company needs to do to grow. And he said, the founder needs to speak with 10 potential moms, because mom was the target, and sit down with them and ask them questions and learn about them. I say, sorry, but we have 40 employees, we have 2 million revenue. He says, I don't care. What you need to do is this. So what's clear to everyone is the main thing that is the CEO should do is customer discovery, understanding what can you say to people, what kind of product you can offer to make them want you.
Yeah, good. So actually, you raised the thing that value proposition is important, right?
Yeah.
And you have to do the customer development thing. Yeah, a lot of founders, they love to kind of skip it somehow. Yeah, and specifically, I think it's about IT guys. They're just coding, just trying to be in the room, and like Steve Blank usually says, just go out of the building and talk to the client. Good. Okay. But now you're the investor. Yeah. You are the entrepreneur. I think there's no ex-entrepreneurs, but still you are the entrepreneur. But it's two different mindsets.
Yeah.
You're on the both sides. You know the transactions on both sides. Can you just share? I'm pretty curious about this experience of how you end up becoming the angel. Like you made an exit, you started to, invest in, and specifically about the mindset, how you shifted.
So first of all, I want to tell you, being an investor is much more fun. So
People dream about it.
when you are an entrepreneur, you always have to chase people, chase clients, chase providers. You just motivate employees. When you are an investor, like right now, we're like a micros fund, right? So we receive hundreds of messages per day saying, "Hey, can you invest? Can you look at our company? Can we spend time together?" So I'm literally treated like a top model. So I'm an ugly Italian guy treated like a top model because for the investment, for the cross fund. So basically, what I'm saying is much more fun. With that said, what we've seen is that a bunch of people. What we've seen, like the main switch is that while as an entrepreneur is all about bashing your head to the wall trying to make it, when you have to invest, it's all about do the research, learn as much as you can, and then take the right decision. So there is this statistics that says that the difference between a bottom quartile fund, so a fund that has the worst return, and the medium to high quartile fund, so the funds that have good above the average returns, is the hours in due diligence. If it's more than 25 hours per company, you make a lot of money. So if you spend more than 25 hours per company analyzing to invest on more, you make probably 10x the money if you spend less than 25 hours. So it's all about research, and the more research you do, the more the chances you're gonna make it.
Okay. So what was your first deal as an investor? What was the startup? You remember it, right? You usually remember the first business. You remember the first deal.
So we cross-funded the first deal that I've done once I joined is a last mile delivery company. That the thing is simple. Like in every big market, emerging market, there is a last mile giant. So a company that deliver things to people. Okay, so there is one in Vietnam called Tiki. There's one in Indonesia called Flash Express. There's one in Thailand called Ninja Van. They all more than 1 billion worth. So the first deal we've done here is the same thing, but in places like Iraq and Jordan, and then it's going to expand to Saudi Arabia. So let's say that you are a Burger King and you want to deliver your burgers in 15 minutes. You need to have a fleet and you need to have a software, etc. You talk with this company, and in 2 days you have everything ready. That's what they do. The first deal I did ever was another last mile delivery actually, but in Turkey. And one of the reasons why we did it was because the co-investor were Justin Khan, the guy that created Twitch, and Justin Matin, the guy that created Tinder. These are the reasons why we did that. And yeah, that's it.
Yeah, but let's a little bit dive into this. Since me as an investor and also leading the Angels Club, and when the startups get rejection, they always sad. Yeah, it's like I have a brilliant product, we have traction and everything, and people refusing it. So what do you think? I mean, based on your, even with this deal or whatever, any other maybe case, what was the main point or argument for you? Okay, we go there. Was it a co-investor, like you said?
Yeah.
This is the main thing, right?
Yeah.
So as a lesson, we can tell the founder, find your dream investor, I don't know, someone who will put in skin in the game, also invest in, and after that others will follow, right?
Yeah.
Okay. Or
So,
any other?
I'm telling you a bad thing to say, but I'll say anyway. Majority investors ships, so we just follow whatever.
Okay.
If he's
I heard it.
So if a smart guy is saying yes, then we invest. If no one is saying yes, I would definitely I'll say no anyway. Like there's a big problem. Why? Because I give you a secret. So this was a report last week about the venture returns, and the top 10% of the VC funds, they make 10 times the money. All the rest, the average is 1.3. So it means that if you invest in a VC fund, you can expect 1.3 the money. Like I invest 10 million, I get 13 million. That's the average. But if I invest in a top VC fund, I put 10 million and I get 100 million. Now, what does that mean? That everyone is trying to follow those guys.
Yep.
Everyone is like, okay, let's see what they do, I just get in.
Yeah.
Because we got no clue. No one has any clue. An investor don't have any clue about who's gonna succeed, who's gonna fail. And again, so today, if you look at the numbers, 6% of the investment brings you 60% of the returns. So it means that you do one investment out of 20, and this investment make more money than anyone else put together. What does that mean? It means that you invest in 20 people, you fail 19 times, and one is so big that you make it. Which one is the good one? You never know, and you will never know. And whoever is telling you that they know, it's bullshit.
Yeah.
You just can kind of understand that they have the potential and hope they're gonna make it.
Yeah, it really resonates on me, since specifically when you invest, you always say, we're making a joke with our partners, all of them will win.
Yeah.
Like, here's our portfolio companies, all of them will win. For sure, no, it's like 90-95% will fail, but one will succeed. Good. It's good that we smoothly move to the fundraising kind of thing. And coming back to my kind of previous comment and question about fundraising, okay, one of the hints, it's good to have the lead investor. I mean, so others will follow.
Yeah.
But the question is how to find this, whatever we call lead investor or this investor. Let's try to make it kind of a structure. I mean, the way, okay, I'm the startup founder, I have a team, I have a product, I decided to fundraise. So what will be first, next, like A, B, C?
Perfect,
Let's try to make.
So, what's your company name?
MOST.
MOST, okay. We want to fundraise with MOST.
Yes.
First of all, what I need to make sure if MOST must be a good company. If your statement, if your company share, you're never going to fundraise. That's the rule. So you need to have a great company. Great company, what does it mean? A, you need to grow super fast. B, you need to have hell of a big market that allows you to that can allow you to become a unicorn or a $400-500 million company. So, Andreessen and Horowitz, they always do this example. There's something called trombone oil. You know the trombone?
Yeah.
Okay. There's an oil that you put in the trombone, and you buy this oil and it lasts you 5 years. Even if you are the leader in the trombone oil, you're never gonna be a unicorn because you can sell so low, and then you stopped. So the first thing is, A, am I company, my company, has it the potential to become a unicorn, a massive company? Yeah. If it's no, it's fine. You go your way, you bootstrap, you don't raise money. Maybe you raise some, let's say, debt to grow more, but you don't go venture capital way. Okay? So, hey, are we gonna, there's a chance we're gonna be a unicorn? Yes, okay. Done. Second thing, am I growing super fast? If you're not growing super fast, it's not that you're not gonna grow. It's simply like investors, you are competing with other startups that are growing 50, 30, 20% month on month. So if you like last year, you didn't grow that much, there's no point to go fundraising because as an investor, I'd rather go with someone that is growing faster.
Yeah.
Okay.
But I will interrupt you
Yeah.
here. Can we say the range or whatever the number, like what it means to grow
Okay.
a startup?
Very good question.
Yeah.
Okay, so what are the numbers that you need to tell me to show me the growth? The bare minimum, and when I say bare minimum, I mean that if you don't do this, don't even think about fundraising, usually is 2x year on year. So you're raising, you basically, January 2021, you do 10K, January 2022, you do 20K. That's the bare minimum. The average should be 3x. And again, it doesn't mean that if you do less, you can't raise. There are some lucky people that do less and raise anyway. And maybe a way lower valuation. And I've seen people growing 5x year on year that don't fundraise. So it doesn't mean anything, but this is the average. Then monthly growth is, if you calculate the monthly growth is basically between 4-7%, the minimum, and then 10% should be the average. The thing is like one of the main drivers of valuation is actually the growth rate. So if you're growing less than that, your valuation should be way lower. That's the point. Then this is what actually growth means. If you're not growing at the numbers, what you should do is focus, put your head down and grow more. Don't go fundraising, focus on, remember, it's like, like there's the horse and the jockey thing. So the one that wins the race is always the horse, it's not jockey. Like if you think of Secretariat and Varenne, they are the two fastest horses in the country. No one knows who, on the history of like horse race, they are the fastest, right? No one knows who was riding them. You know them. The same thing with fundraising. Like CEO is not as important as a startup itself. So focus on making the startup the fastest horse ever. Don't focus on pitching better or knowing new investors. It's not your thing now. Make a great product and trying to grow as fast as you can. And that's it. Once that you're growing fast and you have a big market, it's all about getting the right strategy. So all the entrepreneurs, so being an entrepreneur is a shitty job. You know it. So you can, if you work at Facebook right now, you get $500,000 per year as a salary and you enjoy life. And at 5 p.m. you close the phone and you go home.
Nice office.
Right? Nice office. Yeah, that's great. Why you want to be an entrepreneur? Because entrepreneur is the challenge. I want to conquer the world. I want to do something. So to be an entrepreneur, usually you are a bit crazy and a bit over optimistic. And the problem is that you think that your company is worth a lot of money, and when you go to investor, the main mistake I see is people go there with crazy evaluation, especially in emerging markets, and they ask a lot of money that they don't need. So the main mistake I see is startup from emerging market, just started, low revenue, going at 20, 15, 30 million valuation, that asking for 4 million. And when you ask what you're gonna do with 4 million, they'll tell you, I've got plenty of plans. Yes, of course you do. But the reality is that you are competing with people that have your same amount of revenue, same amount of growth, with half of your valuation. So you're never gonna get money.
Or you're gonna get from unprofessional investor.
Yeah, probably you're gonna get, if you get it, you basically getting from someone unprofessional. And then what happens is, I go to you and I say, my valuation is 10 million. And you're like, yes, these other companies, same number as you, is like 3 million, 4 million. So I'm not interested. You waste 8 months of your life. And then I go back and say, yeah, my valuation is 7 million. And you're like, I'm not interested.
Yeah.
What you need to do is start low. And start with a low valuation, maybe raise way less. This is one of the secrets. So instead of raising 1 million at 10 million valuation, trying to raise 100K at 5 million, and then other 200K at 7 million, and then other 800K at 10 million. That's how you get traction, you get money, you get connection, and then you create some FOMO because the people know that your round is short and they either in or out. And if they miss you now, they can invest later but much higher valuation. And that's why myself, I look at you and think, oh, well, I need to get in this deal because if I don't get in now, I can basically get fucked. Well, if you come to me and say I'm raising 4 million at 20 million valuation, I'm like, yes, tell me once you have the first 2 million and we talk later. Do you get what I mean?
Yeah. So yeah, I see it a lot. Yeah.
And so you do this. You first step is you understand if you are, let's say, eligible for funding. If you are not, it's still fine. You can make tons of money. I know people that made millions with startups that never fundraise. Sarah Blakely made 1 billion with a startup that never raised any money. MailChimp was sold for like 16 billion or something, never raised any money. So you don't need to raise money. But if you want to raise money, you need to be very aware of the market and don't sell yourself too high because you're just going to lose time. Once you do it, once you understand, then you have a good valuation, you go talk to investors. Talk to investors, the best thing ever is getting introduction, so finding common friends that can introduce you. If you can't, you can cold email. Cold email, keep it very short. So my name is X, I'm doing X, this is my deck, do you want to talk? That's it, nothing more. Then you get the meeting, and in the meeting, what you need to do, and this is the two things that I always says, you need to speak very slow. When people speak slow, the attention level goes up. When you speak fast, people don't understand, lose you, and forget about you. So speaking slow is again, across fund we probably have done 40 or 50 deals so far. And I can still tell you that a slower speaker are the one that the message come across so far, much better. And when we do the EBRD pitch event, the slowest speaker is always the one that get the highest point. And again, we're talking about people that already make millions in revenue. So it's not like it's not a corny thing. And then another thing that you need to put this in your head and never get down. Every year, there are 100 billion invested into seed stage startups in the US only and around 400 billion globally. Money is everywhere, but you are unique. So when you speak with someone, remember, he can be replaced, she can be replaced, but you are not, because you are unique. You are one and only, and no one can ever replace you. So if you miss them, we get another. If they miss you, they will never get another you. Why is that important to keep in mind? Because we are spoiled. Like investors are spoiled. People contact us, people ask for a time, people want to talk to us, people give us dinner, coffee, invitation. So when someone is treating us like it's not pushing us, it's not cheesy, it's not asking for our time, we just question ourselves, why these guys not asking for my time? He's probably have something. And that's why we like you.
Yeah. Yeah, it reminds me the story when the startups comes and we usually ask, what is your runway? How much money is left actually? And he says 2-3 months. And we say, okay, we're the VC fund, we're not the rescue agency, so we cannot give you the money. I mean, yes, totally agree with the rest, but this is what usually sometimes happens, right?
Yeah.
Yeah, it's like maybe it's good that you have runway in 2-3 months and you're supposed to die as a startup.
Yeah, you should.
Yeah. So it means that there's no product market fit, whatever. Well, maybe you did something wrong, I don't know, and so on and so on. Why we need to give the money to cover your risks.
Yeah.
Okay. Good. So.
On this thing real quick, what you guys need to do, every startup on the planet needs to do, is raising as much as they can to be default alive. So right now, you should go out. So if you, and I can tell you like from the bottom of my heart, if you work on your startup and you survive for 10 years, 15 years, you become huge success, always. It's all about lasting 15 years. If you look at from Nike to Tesla to SpaceX to whatever, they spend probably 6 to 7 years being on verge of failure, but then you push hard enough and you always make it, right? So it's being a successful person in startups, it means being alive for a certain amount of time. You need to survive and then you're gonna make it, always. To make it, what you need to do right now, the main obstacle is finish up the money. So what you need to do is right now, look at your bank account, see how much money you got, and raise right now as much as you need to be default alive. So to have enough money until you become almost profitable. That's what you need to do. So you can last your company for 10 years, and then in 10 years, I can bet that you become a great success story.
Good. Okay, so we stopped. You stopped on the thing. Okay, right strategy. Start fundraising. I mean, when you understand that you need fundraising, you need the funding. But again, coming back to, let's say, make it simple to the least, what I call dream investor that I would love to have. So again, if I understand that I need funding, I'm the most founder, I need a funding. So when I need to start, I mean, is it like I know I need a funding now, so it was supposed that I should start, I don't know, 2-3 months ago, 1 year ago, or what? In order to find the right investor.
So there's one thing that is always like good to mention is investors usually don't invest in dots, invest in line. What does that mean? It means they invest in people they see growing.
Yeah.
So I speak with you that you are the CEO of MOST, these amazing startups that do, I don't know what you do, with delivery.
Yeah. Last mile delivery.
Yeah, last mile delivery, yeah. So
okay.
I see you, I meet you when you're just 2 people, and then I see you growing from 2 people to 5 people, and then 5 people, 10 people, and then 10 people, 20 people. I'm like, these guys are good, I invest.
Yeah.
So what you need to do right now is get in touch with as many investors as you can, just showing off what you're doing and let them, hey, I just want to put myself into your radar. I'm not raising right now, or I don't think we are a good fit, but just would love you to know me, and maybe in 1 or 2 years I'll send you some updates. And the investors usually say, yes, let's do it. Because we all know that our decisions are based on how good the due diligence is. And if we know you for like 2 years, I have much more understanding of your business. So I would love you to know you way before. So I had the risk.
Yeah.
So you need to, right now, get relationship with investors. That's the first thing. Second thing, if you got less money than what you need to become profitable, okay, raising right now. Regarding a connection to investors, you should start right now making as many connections as you can, because again, we invest in people we know. Third thing, and last is in Silicon Valley, you can close a round in 2 hours. In there's like the famous people from Tiger Global, this one of the most successful hedge funds here, they invest in startups. They sometimes walk with a term sheet on the pocket, and if they go to a company, the speaker's like, okay, I'm fine, boom, boom, here's the money. But it's not going to happen in emerging markets. In an emerging market, you just have to allow a minimum of 6 months and an average of like 12 to 8 months. So if you want to raise right now, you need to start 12 months ago.
Okay, good. It's always good to make it clear, since we got a lot of discussion on that, and I really like, I hope that our listeners, the people who visited our channel will stick to 2 things, to understand when they fundraise, and specifically that, like you said, you have to have a plan on that. What I see, it's a lot of sometimes chaotic. Okay, I need the money now, I fundraise. I don't need the money, nothing. You mentioned interesting thing about the cold emails. I'm just curious, do you open them?
Yeah.
And any deal happened after, you didn't get a referral, right? Recommendation for someone, or you was following another co-investor, but you opened the email, you read, you met the founder, and you invested.
Yeah, it happens, and it will happen. And the problem is usually the level of the cold email is always very low. So it means that the people that cold email usually don't have connection. They're just doing out this. So again, it's all about signal. When you are cold emailing me, okay, it means that you don't have enough connection yourself. that you just that you're the last resort you have is invite a bunch of get some bunch of email address and send them the email. It means that you don't have connection. It means that you're not able to create connection, and it's a signal that you're not probably as good as resourceful as you should be.
Yeah.
With that said, doesn't mean that you're bad, but you're signaling that you're not on the top. But it's fine. So I'd rather have an introduction for plenty of reasons. But when I get your email, I read it. If it's very long, I don't read it. I just skip it. If it's very short, I read it. I see the deck. I skim through the deck very fast. And if it's there's 5 or 6 things that I like, I go a bit more and eventually talk with the founders.
Okay, so you do it.
Yeah. So I mean, a lot of people that I know, they read we all read we all read email. Most people think that cold email doesn't work because they have bad companies. I'm telling you right now, most people, entrepreneurs, are overly optimistic. So there's a high chance that you look at your company and think, oh, I'm building an empire here. But if you will be ever an investor and we look at 100 deals per week, like we do, you probably see that you're one of many, you're not that special, you're not that good. It doesn't mean that you're not going to become good. But right now, you are at the same level of probably other 100 people that I know. And these 100 people are not going to be successful, I know that. You might be. But right now, I don't see how.
Yeah. I heard a statement that every founders always need to put himself by saying, I'm the first investor into my company. When you try to put it into investment shoes, I've just to stand like, do I really want to invest into this business? Not just like doing it, yes, as entrepreneurs, we love what we do, but try to sometimes just push yourself the thinking that try to be the investor and think and look at your business by saying and thinking, do I want to invest into the business? So this is just kind of a thought I heard, and I think sometimes it's good when we ask the questions from the startup founders and we see there is kind of blurry answers or something, and I'm saying, are you sure that you as an investor just try to be the investor they would love to invest into what you are saying? Yeah. Okay. A little bit of the side question. We are in the emerging market, what I call. I know that you are expert and you are actually working in emerging markets, Balkans, right? Egypt and others.
Southeast Asia.
Southeast Asia. So you have a lot of experience working there, investing there.
Middle East, yeah.
What are the advices, let's say, the recommendations for organizations like we are? I mean, as a ecosystem players, let's say, or even for the founders, I mean, even for investors, what should we do? Or we don't need to do anything, but just organic growth happens in order to boost up the development, the market. So we will be more attractive. We can come up quicker to successful stories. And yeah, so we will be visible to the global scene.
In emerging markets, first of all, there is this big book called The Rainforest to explain how the ecosystem develops, actually. And they always focus on the example of Tel Aviv.
Yeah.
So Israel was a place where it wasn't very well connected. It was kind of closed. They don't speak English, they speak Hebrew. And it was far away from everything. It was in the Middle East. The neighbor country were like Egypt, Lebanon, Syria. So it's not like the best place to start a company. Right now, this is a startup nation. While if you look, for instance, at Italy, or if you look at other countries, they don't have the same level of startups as Israel, but they were very much more connected. Why this place in the middle of the Middle East made it and the other country didn't? One of the main reason is that everyone in Israel is forced to go and join the military, and most of the people, they have a super high level of discipline and education, like technical education. So you have literally an army. And when I say army, it's literally an army of super smart, disciplined people ready to work hard with super high level technology and super high level access to knowledge. So what happened is that all the big companies from Google, Apple, Microsoft, they all went there and create the R&D department.
Yeah.
So those companies, what will happen is those guys were already smart, were already knowledgeable. On top of it, make connection to the rich people, the Silicon Valley people. No brainer. Startups now and then, boom, 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 boom. Once you make the first 2 or 3 or 4 startups that become big, you create this avalanche effect when you basically take a guy that was working at restaurants, now he becomes an operation manager, and now he becomes a VP of operation. So you teach him, and now he creates his own startup. So there's avalanche effect when every unicorns create 2 or 3, 4 unicorns. Yeah. They call it the PayPal mafia, right? In the Middle East, we have the Kareem mafia. So we have
Jewish tech mafia.
The Jewish tech mafia, yeah. We have, there's a bunch of companies that did. There's a bunch of companies that create they create those things. So when it comes to the ingredients to create an ecosystem are talent and connection either to clients or capital. So talent, Kazakh has plenty of talent. Connection, it could be improved. So getting a bridge that connect them to the right investors and the right potential clients is a good way. Now, emerging markets wise, there's 2 kind of companies in emerging markets, like exporter and importers. So, I'll give you an example. Across fund, we have a company that is doing prostheses for arms in Vietnam. So they have a new technology that allow the production cost to be much, much lower. So they create the cheapest prosthetic arms you can find on the globe. These are export of technology, so they will export the technology worldwide. We also have a company, for instance, this last mile delivery company, is basically taking an idea that is already established and putting in a market when there's no competition. The first thing statistically that you should look at is who is the main competitor of the startups, because 85% of all the unicorns on the planet, according to the study called Super Founders, are competing with big non-tech companies. So when you look at the exporter and the importer, you check the competition. If they're competing with big startups, is a no. If they're competing with like a big giant, I don't know, with Coca-Cola, might be a yes. Now, when you look at exporter, it's absolutely vital. They have a huge technology advantage. That's the whole point. So you have to be very good technically and understand if they have a technology advantage. If you understand that, you need to understand if the team is good and if the market is big. And that's how you do with the exporter. If the team is good, they need to be so good that despite the fact that they are based out of Turkey, out of Kazakhstan, or out of whatever, they can compete and outbeat their competitor they are based in Silicon Valley. Now, there's a unicorn in Latin America. There's plenty of unicorns in Southeast Asia, plenty of unicorns in Europe, plenty of unicorns in US. They are doing the same thing. The only market when there's no unicorns right now doing this thing is Sub-Saharan Africa. So you know that the product will work. You know that the market is big. The only thing you should ask yourself in this case when you're investing in importers is the team good enough to kick all the competition ass? So it helps you the risk, because you don't have 3 risks anymore. You just got just one. There is the team. So the only bet you do is the team gonna be good?
Yeah. It's all about people, right?
Yeah.
They can do. Good point. Good. It's not about, it's good that you highlighted what is important in export and import, but it's all about people again. Yeah, actually, I know that we are limited, but the last question is specifically is goodly connected to what you just said about the program that today was launched with the EBRD. It's called Star Venture. And I know that it's a lot of opportunities for the founders, specifically from the non-financial side. Mentorship, advising, I heard a lot of stories. Let's sum up with this program so you can share what the founders can get. Yeah,
so EBRD is one of the largest development banks on the planet. So what EBRD does is they create the first seed stage program where we give a certain amount of funding to the startups, non-dilutive. So the startups don't need to give us any equity or give any money back. They just get the benefit of the funding. On top of it, we give them access to top level mentors and a network of investors where they can raise money from.
Yeah.
So far, we started in Egypt 3 years ago, and the total portfolio value was around 100 million. Right now, the total portfolio value is getting close to 2 billion, so 20x in less than 3 years. And it seems it's going to get to 3 billion by the end of next year. The company raised plenty of money by Sequoia, by Tiger, by all the big names, SoftBank, by all the big names, and it seems they're going to raise much more. So the market has said, not me, but the market has said this is one of the best and most successful program for the emerging markets. First of all, because it's non-diluted capital, so you get capital for free. Second of all, because the company are growing fast, and there must be something. Now we start in Kazakhstan. We are about to select between 5 to 8 the most promising Kazakhstan companies.
Thanks a lot again, and thank you guys. I hope you also enjoy the podcast as I did. Thank you.
Thank you.
Bye.
Thank you, guys.
Bye.